Let's be honest, everything feels expensive right now. Rent, groceries, gas. In an economy like this, that $5 coffee can feel less like a treat and more like a basic survival tool. And you know what? You're not wrong. The financial gurus who pop up to shame you for buying a latte are missing the point. That's because skipping your daily coffee by itself is not going to make you a millionaire. But here's what those gurus don't tell you. That $5 holds the key to a six-figure sum. The real cost isn't $5. It's closer to $186,000. No, that's not a typo. $186,000. And this isn't a lecture about deprivation. It's a conversation about opportunity. But the math that gets you to that number only works if you understand a critical secret about market crashes that most people miss. So stick around because we're about to do the math your barista definitely won't tell you. Alright, how does a simple coffee habit balloon into a six-figure sum? The answer is a force more powerful than a double shot of espresso: compound interest. But here's the part most people don't understand about compounding, and it's the reason they never see these kinds of results. First, let's break it down. A $5 coffee every day is $35 a week. That's roughly $152 a month. And annually, you're spending $1,825 just on coffee. Over a 30-year career, that's $54,750. Gone. That alone is a decent car or a down payment on a house. But that's just the cost of spending it. The cost of not investing it is 3 times higher. That $186,000 number comes from what happens when you don't just save the money, but invest it. Picture this. You're 25. Instead of handing that $5 to the barista, you redirect it into a simple, low-cost S&P 500 index fund. Historically, the stock market has returned an average of around 7 to 10% annually over the long haul. Let's use a conservative 7% annual return. You invest that $5 every day. After 30 years, you've put in that same $54,750. But because your returns start generating their own returns, your account would be worth around $186,000. That means of that final amount, over $131,000 is pure growth. But here's what the truly wealthy know that most savers don't. That massive number isn't even the most important part of this strategy, and what I'm about to share next is what separates casual savers from actual millionaires. Okay, the number is big, but here's the twist I promised. This is not another video telling you to pinch pennies and live a joyless life. Seriously, I don't want you to give up your coffee. The real power of this money has nothing to do with being 65 years old. The real secret is that the $186,000 isn't just for retirement. It's your opportunity fund. Think about the last couple of decades. The dot-com bomb in 2000, the great financial crisis in 2008, the COVID crash in March 2020. They were terrifying, they caused panic, and they were some of the single greatest wealth-building opportunities in modern history. That means when the market crashes, assets like stocks and real estate go on sale. But here's what most people don't realize about who gets to buy them, and it's why 90% of people get wiped out in a crash instead of building wealth. During these moments of panic, there are two kinds of people: those forced to sell at a loss, and those holding dry powder, cash ready to be deployed. The person who spent $54,750 on coffee has nothing but caffeine memories. When a crash hits, they're just trying to hang on. But the person who built their opportunity fund, even with just a fraction of that $186,000, say $30,000 after 10 years, they get to go shopping. They can buy into the market at rock bottom. They don't just survive the crisis, they capitalize on it. This is the wake-up call. It's not about being anti-coffee, it's about being pro-opportunity. I can already hear the keyboards firing up, and you're right to be skeptical. So let's run through a few reality checks. First, I don't buy coffee every day. Okay, let's say you only do it on work days. Invested at that same 7% over 30 years, that still grows to over $128,000. But here's what makes this calculation even more critical. As of early 2026, climate change is already hammering coffee production. Projections show that land suitable for growing coffee could be cut in half by 2050. This is already causing price spikes. That $5 habit could easily become a $7 or $8 habit, making this principle even more powerful. Second, a 7% return isn't guaranteed. You are 100% correct. Past performance never guarantees future results. But here's what the skeptics miss about this principle, and it's why even with lower returns, you still come out way ahead. If the market does worse, say 5%, you'd still have nearly $138,000. If it hits the historical average of 10%, that number skyrockets to over $379,000. The principle is the same. And finally, but my coffee brings me joy. Life is for living. This is the most important point, because life is for living and your coffee absolutely brings you joy. But here's the mental shift that lets you keep your joy and build wealth, and it's why most latte factor debates completely miss the point. The real question is this specific $5 coffee worth more to me today than the freedom and opportunity it could be building for my future? Maybe brewing your coffee at home a few days a week to build your opportunity fund is a trade you're willing to make. Knowing the math is one thing, but making it happen is another. The good news is that it's simpler than you think. The key is to make it automatic. But there's a specific reason why automation is the only thing that works, and it's the secret to beating your own worst enemy, your brain. First, open a low-cost brokerage account. Second, set up an automatic transfer. This is the magic step. Treat your investment like a bill. Set up a recurring transfer of $35 a week from your checking to your brokerage account. Automation makes you consistent. Third, invest that money in a low-cost, diversified index fund or ETF, like one that tracks the S&P 500. You don't need to be a stock-picking genius. You just need to be consistent. There are even micro-investing apps that let you start with just your spare change. The tools are out there. So, is your daily coffee keeping you from becoming a millionaire? The honest answer is no. But here's the real danger. It is keeping you from grabbing a six-figure opportunity the next time the world's markets go on sale. The choice isn't between a miserable life of saving and a reckless life of spending. It's about being intentional. It's about understanding the incredible power that small, consistent actions have over time. That $5 isn't just cash. It's a seed. You can drink it, or you can plant it. Your latte factor might not even be coffee. It could be takeout lunches, subscription boxes, or impulse buys. Whatever it is, the math works the same way. So here's my challenge. Find a free compound interest calculator online. Plug in your own numbers, your habit, a time frame, and a 7% return. See what your personal opportunity fund could be worth. Then drop a comment below. I want to know, what's your $5 habit and what's your shocking number? This isn't about shaming you. It's about waking you up to the power you have to turn tiny habits into a future where you don't just survive the next crisis, you thrive in it. Thanks for watching.